Hello, welcome to Accounting Hub. I'm Professor George Scarpi, PhD in accounting, and our topic today is income statement. As you already know, we have uh, some financial statements, balance sheet, or statement of financial position, depending on where you are, income statement, statement of cash flows, etc. And by the way, the other financial statements videos, they are in our video description. Okay. So, income statement reports the revenue, expenses, gain, and losses that have occurred during the reporting period. So, what do we have? What is revenue? Inflows of resources resulting from providing goods or service to customers. And expenses, outflow of resources incurred while generating revenue and represent the cost of providing goods and services. And we have the gain and losses, increases or decreases in equity from per- peripheral or incidental transactions of an entity. Example, gain and losses can arise when a company sells investments or property, plant, and equipment for an amount that differs from their recorded amount. They, it is not the core of this business, so they are not revenue, they are gain, and they are not expenses, they are losses. Okay? So, man, I am talking about revenue expenses, but let's see how a real income statement is. And we will be working with two, Coca-Cola and Fiat Chrysler automobiles. And it is not classified information. They are free to download it. Here are the link on their website. If you check here, Coca-Cola Company and also FCA Group. So nothing classified here. You download it. If the link is too long for you to write it down, they are also in our video description. Okay, so let's go there. Let's start with Coca-Cola. It is on page 68 if you want to check it. Oh, what do we have? Just like any other financial statement, they must provide at least 2 years. Usually, US based companies for the income statement, they provide three. But it is not mandatory three. Usually, it's two or more. Also, the income statement, it is not mandatory to have this name. For instance, Coca-Cola call it statements of income or statement of operations. There are some different names. Okay, so what do we have here? Net operating revenues, selling soda, cost of goods sold, the cost to produce these sodas, and then operating operating revenues less cost of goods sold, we have the gross profit. So this 22 here, it is 37 less 14. 22.6 is 37.2 less 14.6. After that, we have our operating expenses that are selling, general, and administrative expenses. And this is the model that we call it by function. It is the only one accepted in the US. If you are working with IFRS, we also have by nature. And we will check the FCA, they do it by nature. Okay? And other operating charges and operating income. That is gross profit less selling, general, and administrative expenses, less other operating charges. And we have interest income and interest expense or interest revenue. Okay. And then equity income and other income. These other income here and also the equity income or loss, they are the gain and losses. Okay. So here we have a lot of positive numbers here, and then we have our pre-tax income or the official name, income before income taxes. And after that, we have our income taxes and then the net income. And it is a consolidated net income. So we have the net income attributable to non-controlling interest, so to the other non-controlling investors. And then we have the net income attributable to share owners of the Coca-Cola company. And after that, we have the earnings per share. We have we will have we don't have it yet, but probably in the late fall 2020 or early spring 2021, we will have videos about earnings per share. Okay, so this is our income statement by function. And if we go to FCA and here IFRS, usually we have only 2 years. And then uh, we have the operating income. So they started working with operating income. So very few info here. So not so good info. And then personal costs, other operating costs, net financial expenses, profit or loss before taxes. Oh, a huge loss here. It is in million of euros, so 353 million euros. And income tax, probably they have previous tax gains, so they have tax here. And results from investments. Wow, they invest in very profitable companies. And then net profit and profit from discontinued operation. That is the operation that they discontinued in 2019. So they will not have these gains in 2020. And they have a huge net profit, but not based on operating profits. So this is the income statement by nature or by natural functions here. Uh, it is not allowed in the US, but IFRS, they can choose between both. Okay, so here, one video will cover US GAAP and also IFRS. That's why accounting is so beautiful. Okay, guys, so thank you so much. Please subscribe our channel and you will know when new video arrives, usually 3 videos per week. Also, like our Facebook page, Accounting Hub by Dr. Scarping. And if you have questions or comments, leave it here or email me at jscarping@gmail.com. Okay, guys, have a very nice day and God bless you.